stars. Let me see what spring is like on Jupiter and Mars.
Welcome everyone. How's it going? Happy Wednesday after hours. Yes, I know Yash is online after hours. Let me know if my audio is coming in clear. I hope my setup is all good. Not my usual time to go live, but I felt like we had to. Let me just pull up Webull here. 824 for the day on Tesla, up 6.17%. How's it going, people in the chat? Martin, Cyclone, Tesla Cylon, sorry, Boyle, Harry. How's it going, folks? Audio good? Okay, awesome. Appreciate it. All good. What a treat. Appreciate that, Michael. Okay, so we got a lot to talk about today. I'm going to talk about macro, the Fed. Don't worry, I won't go into too much boring details with all of that. But there's a couple of things in the end of the week that I think everyone should be aware of, even if it comes to investing. I know shorter term events don't really affect us, but I think in this environment they do. So we got to talk about that. We're talking about some Tesla related news as well. Ford actually reported earnings after hours, so we'll briefly invest some of our energy into that. But first, let's go into the Fed. Awesome. Antonio says I'm on the airplane in SFO. Well, fly safe, my friend. Oh, by the way, this stream is sponsored by the subscribe button. So hit subscribe if you haven't already, and the like button if you've already subscribed. Okay, Gary Black surmises this for us pretty well. And hopefully my aspect ratio is not too weird here. Let me just stretch this to screen. Okay, Fed raised interest rates today, overnight rates, 75 basis points. Gary says unanimous decision right up front. There's acknowledgement of softening in the economy, changes in statement versus Zoom. I'm not going to redline. I'm not going to read all the redline changes here. But the big difference here with the Fed increasing basis, by the way, it wasn't a surprise, right? That the Fed was going to come out and either raise 75 basis points or 100 basis points. There was a smaller chance of the 100 happening, evidently so. I'm still of the belief that they should have done the 100 basis points hike and then signed off for the summer and then came back to September with inflation being extra soft. 75 basis points is just kind of, middle of the road, in my opinion, for where inflation is at right now. But I digress. The big portion to consider from today's meeting with Jay Powell is, and by the way, if you haven't heard already, NASDAQ loved this news. NASDAQ was up 4.23%. The biggest single trading day gain for the NASDAQ since November 2020. The S&P 500 was up 2.6%. So really, the stock market loved the news. What do they really love about it, though? I mean, at the end of the day, 75 basis points in terms of a hike is substantial, especially considering the hikes that we've seen already. But I think the biggest caveat in Jay Powell's statement today was that he thinks that the majority of the accelerated rate hikes are behind us. Meaning, yes, we may get a couple more rate hikes, 75 basis points in total, let's say 1% more. But he thinks the majority is behind us. But he's also very careful not to signal that next year we're going to be lowering rates again, because it's super important that we understand this. If he comes out and he says, look, we're going to be lowering interest rates next year, well, our credit behaviors are not going to change very much. What Jay Powell and the Fed need to convey to the market is, look, we're strict on this and on inflation, and we're not going to just turn the tide as fast as we can, which ironically is going to turn the tide faster because they need people like us, consumer habits to change, borrowing habits to change, spending habits to change to cool inflation down before rates come back down. So I think it's generally okay. 75 basis points. We'll see. The big event to really look for this week, and there's a couple big events. I've got our calendar here ready to go. By the way, let me know in the chat where you guys are tuning in from. I see a bunch of familiar faces tuning in. Hamilton, how's it going, my friend? Okay. We got a couple of key economic events. Tomorrow, 8:30 a.m., we'll be getting our gross domestic product first release. Now, remember, we talked about inflation, or we talked about recession. Are we in a recession? Well, we'll be getting our print for the GDP quarter two very soon. And once we get this print, the headline risk of, look, we're in a recession, we're not in a recession, will come to fruition. For what it's worth, even though I think that's a headline risk, I think it's, for the most part, almost been priced in. Like, the only people that don't think we're headed to a recession, ironically enough, is the White House. But I get it. They have to kind of say that. We do have our jobless claims tomorrow as well. And then Friday, we have our PCE inflation index. Now, the reason why this is important is because Jay Powell specifically said today, I'll try to make this a little bit bigger. The reason why I think this is important is because Jay Powell specifically said today in questioning that he looks at PCE more than CPI. So CPI, Consumer Purchase Index, out-of-pocket expenditures. PCE is a little bit more, let's say, normally distributed. It includes way more demographics of people, places, businesses, nonprofits, blah, blah, blah. So he looks at that. The Fed is looking at that. Now, maybe we live in a world where 75 basis points is done. The market loved the news. And come Friday, PCE is cool. And if PCE is cool, we can hopefully expect a monster rally on Friday if PCE report comes out to be cooler than expected, because that would signal come September, the rate hikes will not be as substantial as people are predicting still at the moment. And then, of course, we talk about potentially having a U-turn in the market. So there's that. Let me read out some city, states, countries, by the way. Thanks for joining, folks, on an after-hours stream. Why don't I stream every day? I know I should, even if I'm on the go. I was thinking about streaming outside today. It's about 37 degrees. That's why I'm wearing the bucket hat and the tank top. Atlanta, Georgia. How's it going, folks? Shackleton, Crater, Luna, Boyle. How's it going, my friend? Nice bounce for Tesla stock. Oh, absolutely. Yes, SoCal, Richard. How's it going, my friend? Colorado, Brand, Detroit, Media. So, by the way, shout out to you guys coming in. I see a lot of new faces today. After hours, the demographics is fun. Now, that leads me into what's important for earnings. And by the way, let me just change our Webull to Tesla, not TS. Okay, so earnings. If you don't know, today after close, Facebook reported earnings, down about 5% after hours, thereabouts. Ford is up about 6-7% after hours reporting earnings, which is funny. And I have a tweet here from Holmar's catalog. Quarter 2 2022 net income. Ford 667 million, GM 1.69 billion. Nice. Tesla 2.3 billion. Now, mind you, of course, and Omar actually clarifies this on the bottom, saying, granted, without the loss on Rivian, they would have been more profitable in Tesla. So, and they wrote down about $2.4 billion worth of their Rivian investment, which is hilarious. But regardless, Tesla's unit volumes versus any of the large legacy automakers is laughable. And for them to already be higher in net income, not just adjusted EBITDA or some other metric, but net income is actually hilarious. Sacramento, Toronto. There we go. Awesome. Brad says, but Ford has better credit rating than Tesla. Yes. Of course, least we forget. Which, by the way, I talked about this on stream, but if you haven't already heard my thoughts on the investment grade credit upgrade, I think that's coming very soon. Maybe in the next couple of weeks is my guess. I do think it's going to be a big deal once it does come out. Just because from what we saw last year when Tesla credit was upgraded a couple of notches. So I do think it's going to be a big deal. Okay. So tomorrow, here's what to watch for tomorrow for earnings. After hours tomorrow, we have Apple earnings, Amazon earnings, and then Roku. Apple and Amazon are very key. Apple, number one, is key because they give us a unique indication into the China supply chain, into hurdles that are coming up in China specifically, and less so consumer sentiment. But Amazon is amazing for Wall Street to hear their thoughts on consumer sentiment. If you think someone's going to know that if a demand side recession is coming, it's going to be Amazon. Amazon is so acutely in tune with consumer sentiment. They can see their search, and Google as well to a degree, but Amazon shopping is just unrivaled. So I think Amazon will be a key earnings tomorrow after hours. I don't know which way they're headed. I don't know what their expected EPS is or anything like that. Maybe tomorrow if I stream, we can go through that. But tomorrow after hours will be key. If we can get some bullish sentiment from Amazon or Apple after hours tomorrow, and then Friday morning PCE report comes out a little bit cool, this could shape up for a monster end of the week. Of course, that's granted that everything goes the way that we want. Ye says, will you stream Thursday 24 hours? Seems like a cool day. I wish I could. 24 hours. I had that bet going. What was that bet? It was like if Tesla hit like $1,500 or something, like I'd stream 24/7, or no, not 24/7, 24 hours, like 24 hours mega stream. But we got some time to go until then. Okay, back to Tesla related stuff. Oh, by the way, this tweet I found amusing from Sawyer. Tesla operating margin in Q2 2022 was 14.6%. Ford operating margin was 9.3%, which they reported after hours. So Tesla already at a unit economic level, already 5% more profitable on operating margin than Ford, which is, and by the way, this is with factory shut, right? This is with factory shut. Okay. Also, we got some Tesla insurance news as well. Let me know in the chat if you guys have Tesla insurance, plan on getting it, whatever. But breaking Tesla insurance has just actually launched in Utah and Maryland. Tesla insurance now available in 11 U.S. states, covering a population of 130 million. Of course, no updates here in Canada. Washington State is still without it. Several other big states, of course, more on the eastern seaboard type of area. But I mean, Tesla's got California, they got Texas, Oregon, which, yeah, whatever. I mean, Florida. So not Florida yet, I should say. So there's some big states to cover, but Tesla is making pretty good progress with their insurance. Awesome. So with price action as well today, let's just go back to Tesla for a hot second. So as we sit here at 824 on Tesla, I'll pull up the daily graph if I can. We're sitting at a pretty key level of resistance on the upside. Namely, I mean, it's pretty funny. It's our 300-day moving average. This is how much we've retreated in the last couple of months here, that we're having a hard time breaking through our 300-day moving average. We actually got rejected off the 300-day on the 22nd of July last week. And so as we approach here, the 300 days sitting at around 834. If we look at kind of levels to watch for on the week, if we can break above the 300-day moving average, it'd be the first time that we've closed above that since May. May 6th to be exact. And then we kind of gapped down the following couple of weeks after. So the 300-day moving average sounds like a kind of a dystopian world that we're talking about. The 300-day moving average is something to talk about in terms of breaking on the upside. But I think that's going to be a key level to watch for our weekly close. So 800 and let's just call it $840, give or take, by the time that we get to Friday. It'll be an interesting Friday for sure. Absolutely. Where is that? Martin says, breaking. Gary Black is reporting that that Manchin has reached an energy deal with Democrats that will include EV tax credit. Maybe I'll pull up Gary's Twitter here, if that's what you're talking about. Let me see what Gary is tweeting here. Gary actually just tweeted us 11 minutes ago. Shout out, Gary. New EV credits set to include in Schumer-Manchin deal announced today. $369 billion for climate change plus $300 billion deficit reduction, paid for by the $740 billion in new revenues, included 15% corporate minimum tax, reduced Medicaid drug prices, stronger IRS oversight. Oh, great. And closing carried interest loophole. Well, great. So this is the Bloomberg headline. This actually just came in right now. Good timing for it. Electric vehicle tax credits set to be extended in Senate deal. Deal includes multiple EV tax credits, according to the person who was speaking on the background to discuss details which have not been made public yet. So I guess we'll see. We also got news. I'm not sure if you guys read about this news as well. Thank you, Caesar. I appreciate the good look. Yes, the bucket hat is needed today. It's quite hot. I tweeted this out the other day. I'm not sure if you guys saw this, but the Department of Energy intends to loan Ultium Cells LLC, which is a GM LG Energy Solution joint venture, $2.5 billion for construction of new lithium-ion battery cell manufacturing in Ohio, Tennessee, and Michigan. So you talk about GM getting another, if you want to call it, another bailout. This is essentially it. It's kind of sad to see. I mean, okay, look, in one degree, we love to see the proliferation of other EV manufacturers, but this, you know, it smells like a duck, quacks like a duck. It's probably a bailout, and that's what it really smells like here. So I don't know. So that goes back to the point with Gary Black and talking about the energy credits and all this sort of stuff. I guess we'll find out when the details come through of it, but I wouldn't be surprised if Tesla is not preferentially, or, you know, not on the same level of preferential treatment with these tax credits than GM or Ford will be. I think I don't think it's a hot take to say that GM and Ford are pretty much in the government's pockets when it comes to this sort of stuff. Yeah, and unions, exactly, Harry. Yeah, for sure. Ryan says, any more price increases for Tesla? Yeah, you talk about you talk about upgrades for price targets. I can take a look here on tip ranks. I can log in. But if you're talking about Tesla car price increases, I don't think so. I haven't seen it, but I'll pull up tip ranks here and see what they've got going on for Tesla. Shout out tip ranks, by the way. They hooked me up with the ultimate account on them. Okay. So yeah, actually, no, did I talk about the Adam Jonas price upgrade or the reiteration, I should say? Adam Jonas, again, 1150 is the price target for Morgan Stanley with Adam Jonas. Adam Jonas, again, remember, is ranked 188 out of 3,000 or whatever analyst out there. So his average rating is 52%. So it's pretty good. Or average return, pardon me, is 8.1% and 52% positive. So it is what it is. But 1150 is about a 40% upside, still reiterated by Morgan Stanley. And the note, by the way, I found this really interesting. I don't think I've actually read this note on stream yet, but I'll do that now. Morgan Stanley analyst Adam Jonas said that Tesla will exit fiscal year 2022 at a nearly $2 million annualized production run rate. Again, Elon talked about this on the call. And forecasts the company should, quote, double that within 2 to 3 years. So double 4 million within 2 years, let's say on the bullish side. That would get us to about 2024. 4 million is what he's saying between 2024 and 2025. I think it'll probably be higher than that. However, he said Tesla is becoming a, quote, a mass market player is both good and bad, as he argues that, quote, size brings complexity in autos and exposes the company to incrementally to macroeconomic and geopolitical risk. Jonas, who made a number of adjustments in his earnings forecast following Tesla's better than expected Q2 results, keeps an overweight rating and an unchanged 1150 price target. Look, folks, I don't think the price target is gonna be upgraded substantially by Wall Street until up until Tesla actually rallies. So up until that, I don't think we know how these Wall Street analysts like to upgrade when the stocks are rallying, like we saw in the bull markets in the last couple of years. They like to upgrade once their target has been kind of met. So, but what he says, his argument is, look, Tesla becoming a mass manufacturer, that's good and bad because all of a sudden now you're going to have complexities and, macroeconomic and geopolitical risks. Look, that's the same thing with companies like Apple. I mean, no one talks about, Apple sucks because Apple has macroeconomic risk and geopolitical risk. I would argue Tesla has had the risk of complexity and geopolitial risk being a smaller manufacturer in the last couple of years than any other company at their scale had. Old Barn is asking, any chance Tesla could change their stock split to a larger split last minute? Wish they would have chosen at least 5-1. Look, I think that anything's possible, but I don't think they will, because I think when the 3-1 happened and they signaled a 3-1, I think Tesla was sitting at over $1,000 at that point. Could be proven wrong on that. I don't think they will. I think Tesla likes to keep their general price between $200 and $500, $600 on the upper end of their stock, but anything's possible. I think the way that they have the annual general meeting on August 4th, which, by the way, if you're a Patreon or channel member and part of our Discord, we'll be having our live group voice call, share screen for that. So shout out you guys. But if you look at the way that the authorized shares are announced, they have the ability to continually split from there. But they would probably, if they wanted to change that, they probably have to put some sort of an amendment into the annual general meeting. So I just don't see it happening, personally speaking. Yeah, I just don't see it happening. But plus, like right now, as we sit here at $824, let me just do a quick calculation. Right now, if Tesla split 3-1, it'd be $274 a share, $274.66 a share, which is whereabouts I think Tesla wants it to be at. And Old Barn says odds are Tesla will have to do another split next year. I think Tesla, and this is me speaking out of pocket, but I think Tesla wants to and likes to follow kind of Apple's model of splits. Just do a 3-4 or a 3-1, 4-1, 5-1 split every 2-3-ish years and continually do that every so often. And I think Tesla would rather do that than do a mega split 10 to 1 and just kind of leave it for decades and decades. So that's, at least that's my thought, is that Tesla will continually want to split like that. Farzad says, yeah, she rocked this look forever, bro. What a Chad. What a Chad. Oh God. Okay. Well, in that case, I might have to change. No, okay. The look, I have an excuse for it. It's 36 degrees. Feels like 36 degrees Celsius. That's like 99 Fahrenheit or something. And it's quite hot. I've got a fan blowing on me. And of course, I got to rock the Juju merch. Hashtag nicejuju.com. Use code Juju for 10% off. All you need is a fishing rod. Yeah, no kidding. Honestly. Awesome. Oh, by the way, I'll be, Farzad, I'm not sure if we're still good, but I think it's still on my calendar. I'll be chatting with Farzad on his channel sometime next week. Go subscribe to his channel already if you haven't. PowerPoint says, betcha no AC either. I have AC. I have the window AC, but not in the office. Not in the office. Yeah, okay, Farzad says we're good for Monday. So I'll be on Farzad's channel talking Tesla or whatever else next Monday. Go subscribe to his. I'm so based. Even if I wanted to set up an AC in my office, I actually can't. There's no windows here. So I have like no way to throw out the exhaust of the heat. But we have an AC in the house, which is good enough. All right. Much love. Take care. Shorter stream today. I thought I'd go live to talk of the 6% move. Again, recap, GDP print coming out this week. Apple, Amazon report tomorrow. PCE report out Friday. Jobless claims as well. A lot going on to end the week. It's going to be spicy. 6% update is nothing to sneeze at. It's definitely not a nothing burger. And remember, Apple and Amazon tomorrow, I think, are going to be low key pretty. It's going to be the fundamental basis for in the next leg or the next chapter for the next couple of months. Because if Apple and Amazon kind of really reiterate bad guidance for the end of the year, I think we might be in a kind of a slower death march or a flatlining of the market. If they come out very bullish to end the year and they say demand is still strong and supply chains have eased up, that could really turn the tide here. But again, I'm happy. I think 75 basis points makes sense. I think still 100 would have made a little bit more sense. But the good news is we're not going to hear from Jay Powell until September now. So take that with a grain of salt if you want. All right, much love, everyone. Take care. I'll catch you guys on another episode, probably a regular episode tomorrow, maybe a live stream after. Who knows? Just hit subscribe. I don't know what I'll do, and I can't pretend like I know what I'm actually going to do. But if you enjoy the content, if you enjoy the live streams, if you enjoy the commentary, hit subscribe. And join the Juju Gang if you want by joining Patreon. It helps support the channel. And thanks. Digital's asking who won the closing price game. If you don't know, I played the Tesla closing price guessing game, Price is Right rules, on my Twitter. If you're not following me on Twitter and you want to, I mean, disclaimer, my Twitter sucks. But if you want to follow me on Twitter, link should be in the description. All right, guys, much love. Take care. Appreciate that. Thanks, everyone. And I'll catch you probably tomorrow. Much love. Talk to you in the Discord if you are a part of our Juju Gang family. Much love. Peace.